what could we do to improve the capacity? What do we need to change in our processes? We realized there's a lot of stuff the bookkeepers were doing manually. We're like, well, if we automated that, what does that do to their capacity? And we realized it added about 15% to each bookkeeper. That now changes our capacity calculation. And just kept looking at it and saying, what could we make better? What could we make faster? As you do that, your capacity number keeps growing and growing until that's at an acceptable level for us to be able to say, if we brought on 15, we could still handle it.
All right, on this episode, Modern CPA Success Show, we're doing a throwback to some we've had on previously, and I'm really excited that they're going to be back today. Right before I get to them, I am joined today by Jody Grundon, my co-conspirator. Jody, welcome. Thank you for helping today with hosting.
Appreciate that.
Jody was one of the co-founders of Summit CPA Group, and now we're part of Anders, but helped us with the entire direction of where we're going from a VCFO practice. I'm Tom Waddleton. I'm one of our full-time VCFOs in the Anders VCFO division. So our guest, Jody, today, Terrell Turner, and Terrell's co-founder of TLTurner Group. Terrell, welcome back. We're excited to catch up and kind of find out what things have been going on in your life recently.
Oh, thanks for having me back.
Yeah. So help us with a little bit better introduction. I'd love to hear more kind of career story and what brought you to where you are today with us.
Yep, absolutely. So I was probably starting off like your typical accountant. I went to undergrad, grad school, got a master's in accounting, worked in public accounting, was on the CPA track, and then I realized like auditing was not the life I wanted to live. And so I left auditing and started working for a couple of Fortune 500 companies. And I think that's where I kind of found like my path of just being able to take accounting and finance and translate it for non-finance professionals. So I worked with a ton of engineers, from mechanical engineers to aerospace engineers, and they always reminded me that they were rocket scientists. And so I worked for years with them. And really, I think it really taught me and prepared me for like what I'm doing now in leading my own firm. And we specialize in working with law firms. We do bookkeeping, CFO work for law firms. And really, it's translating financial information to non-finance professionals and helping them make decisions in their law firm and helping them navigate that. And then outside of all of that fun is, hosting podcasts, speaking at different conferences and events.
Mm-hmm. You're speaking a lot.
I think I heard you right. You went to the second best Indiana school, Notre Dame. Is that right?
Nice.
According to me, it will always be the number one school, but I will give that to you.
Indiana. I mean, Purdue. We've got a Purdue over here. You got an Indiana here, Notre Dame. That's pretty amazing.
We've got the Indiana schools, don't we?
Absolutely.
So, was that your undergrad or your grad for Notre Dame?
That was grad school.
Grad school. Okay.
Mm-hmm. Yeah, I'll give it to
Tom was Indiana grad, right, Tom?
I did, yes.
I will say, because Indiana won the national football championship, they're gonna be the Indiana school for a little while until someone else in Indiana steps up. Now, I don't have much hope for Purdue stepping up, but maybe Notre Dame can have a chance.
Make me desperately want to switch over and talk basketball, but we're gonna come back. So you're speaking one of our languages aside from school around niches. So we really push people that we think niching is a really good way to go. How did you get into working with legal as your niche?
Yeah, so I'll say, like many people starting off, I mean, when I started my firm back in April 1st of 2020, it was really is whoever can afford to pay me or wanted to pay me, like we'll take them on, because I had left my full-time job and graciously, my wife agreed. But the plan was like me to leave my full-time job, go down to zero income, and I was going to build this amazing firm. And then COVID happened. I had already announced to my job that I was leaving. So I'm like, okay, I got to figure this out. And so it was a lot of working with whoever would pay us. And at the time, I think really figuring out that there were some industries that I was like, yeah, I don't think I want to work with those industries. And also, I would say probably about maybe a year and a half, 2 years in, where we started hiring staff, what I realized is the staff had a a huge issue with trying to bounce between different industries. It was almost like
Mm,
they couldn't really get into a good rhythm. And I was seeing like mistakes coming through. So like I had to be in the details a whole lot more than I wanted to. And I was like, okay, all right, we got to figure out how to solve this. And I think it was actually around that time I had interviewed Adam Hale. And one of the things that Adam had talked about
Mhm.
is like, that journey of where, where their firm was at, and just how really figuring out like who do you want to work with was a really big key
mhm,
thing. And so I'm like,
Mhm.
I took that to heart and said, all right, who do I really want to work with? And after doing some consulting with a couple of law firms, I realized like, you know what, they need our help. They can afford to pay for it. And I mean, I think they appreciated it because they were professionals as well. And they were experts at what they did, and they would appreciate what we would do for them. And then I started to realize like that all lawyers have like certain centers of influence. Like every lawyer has to be part of a bar association. Like they go to pretty consistent conferences. And so I was like, well,
mm.
all of them tend to like that means it's going to be easier to find the lawyers where they are. And so I was just like, hands down, that was a great, niche to pick. And so we've been doing that ever since.
So on that, with us, we have a few different niches now. So we started with marketing agencies, then we went to law firms, then we went to trucking, and then we went to nonprofits, and then construction. So we've got a few different ones. Each has a thought leader, and really kind of promoting our marketing efforts towards those. However, if a franchise owner of a restaurant, calls in, we've got several of those. We don't turn those away necessarily.
Mhm.
So we market towards our different niches, and that's where we look for thought leaderships through the seminars and conferences and all the material we put out there. But for those folks that come outside of that, we actually bring those in as well. If they're a good fit, they got to be a good fit, obviously. Now, if I'm not mistaken, or did I hear you right that even the Burger Kings of the world that come in, you would say, no, it's not a good fit. You'd pass out on somebody else, or would you also take that, knowing that you're still marketing, and the majority of your clients are going to be law firms?
Yeah, so I think similar to you guys is if we look to see is it a good fit, and I would say, I mean, since we're a firm of what, maybe what, 11 people on the accounting thing, well,
Mhm.
within the accounting function. So I'm like,
Hmm.
I'm honest about what our capacity looks like.
Hmm.
And right now, I mean, we're in a good position where we're seeing enough of the law firm leads to where if there are non-law firms coming in and we're like, we don't have the capacity or it doesn't make the most sense, those we'll refer out. But I would say probably 85% of our business is law firms.
Okay.
The other
Cool.
15% are people who happen to they were a good fit and they showed up at the right time.
Hmm.
Oh,
And then you have enough. Like, if you were to get rid of all the rest of your clients, do you have enough to survive only on the law firms, or are you still kind of building that, or is it just simply your staff for the 100 clients you have, 85 of them are law firms? That's fine. How's that working for you? Are you to that point where it's super profitable because I'm working majority on law firms, or
Yeah,
are
I
you
would
getting more?
probably say I would probably say, I mean, we're still in that building phase to where like if we got rid of like all of our non-law firms, we wouldn't be
Mm-hmm.
able, I mean, we wouldn't be a
You
profitable firm. So
okay.
we're
hmm
still in that point of like building up that law firm base a bit bigger. It's just it's definitely been the fastest growing area. I mean, because one is we're targeting it in our marketing, but we're not quite there yet to
hmm
say, hey, we can cut everything else off and only focus on law firms.
hmm
Okay.
Have you
Oh,
kind of dialed that in going forward and say, hey, I think if we get to X amount of firms, we're going to be there, and then we're going to gradually, we're not going to let our clients go. I mean, that doesn't make sense. But if they leave, we're not going to replace them. I guess would be the way to go. Yeah, have you kind of thought through that or modeled that out? Because I'd be super curious on how many, or revenue size, or percentage of, what kind of net income, what is your barometer, I guess, to say, hey, we're 100% law firms now, or we're the nonprofit firm of the United States. We
mhm.
only deal with nonprofits, or whatever that is. Any idea what that breaking point is, or where you go strictly with one versus having multiples?
Yeah, so I do think for us is if we get to the point of bringing on, I'll say about 15 more law firms when we were looking at kind of our numbers,
Mhm.
we get 15 more law firms,
Yep.
like we can more comfortably say like, all right, let's find either a different home for those existing clients who may be a better
Mhm.
fit, or hey, if they leave, we're not in a rush to replace them because hey, we got enough
Mhm.
of the law firm business. So I would say we're probably about 15 clients, so law firms away from reaching that point.
Mhm. Yeah, are you looking for like a gross profit of about 50% ish, somewhere in that ballpark? Is that kind of like your financial barometer? Hey, our law firms we're at 50% now, so we're solid. We're pretty solid. Or is there like a financial barometer you can look at, or is it a satisfaction barometer? Or how do you determine the 15? How's that determined?
Yeah, so when you looked at it from a I guess a revenue and kind of a profit standpoint of just saying like, hey, at our normal price, like for most of our law firms that we're bringing on, I mean, monthly revenue wise, they're around like $2,000 a month. So I mean, we bring on 15 more law firms. You're looking at like another 30K in just law firms added to where like, okay, all right, our current staffing structure could support that, and which means we wouldn't have to increase our cost anymore. So like we're gonna add 30 more thousand to the law firm kind of vertical, and it's like, hey, that's enough to give us a at least a 40% gross profit margin, which means like, hey, we could survive and still continue investing in growth at that pace.
Mhm.
Oh,
Gotcha.
that's really
Okay.
helpful. So you're talking about one of the questions that a lot of people ask us is around how do I know the capacity of my team and when should I add people? So I think I heard you say you could probably add 15 more with your existing team. Can you talk a little bit about, if I heard that correctly, but how you think of capacity? How are you measuring and feeling like you get a good handle on what your team is capable of doing?
Absolutely. Yeah. So I think this is probably a benefit to those years of working with mechanical engineers and
Hmm.
working in industrial manufacturing of
Mhm.
like really getting to nuts and bolts of like how do we measure capacity. And it's, I mean, I remember working in a manufacturing facility, and it's like we go down to the line, let's measure how long does it take for these parts to get through the process, and then okay, how many stages in the process, let's do the math, how many people, how many machines. And so I kind of take a similar approach of like, all right,
Hmm.
if we're working with law firms, they tend to have a pretty consistent process. The
Mhm.
processes are about the same, across most law firms. And so we kind of map that out to say, hey, we're looking at the law firms that we currently have. We map it out like how long does it take to close the books on this client, or how long does it take for us to update the forecast? How many meetings are we having with these clients so we can see like with general accuracy like how much time it takes to support this client, how much time does it support
Mhm.
to take this client, and then we can look at our staffing structure to say, okay, all right, how much support do we have, like how much capacity does the team have for the number of clients we can support. And we
Hmm.
did the math that way now, and I would say probably about 6 months ago when we did that math, we realized like our capacity was maybe we could bring on 7 more clients. And I was like, what could we do to improve the capacity? And that's where we started looking,
Mhm.
all right, could we use technology, or like, hey, what do we need to change in
Hmm.
our processes? And what we found some things where like we had our kind of our structure when it comes down to, let's say, bookkeeping was you have a bookkeeper, a senior accountant, and we realized there's a lot of stuff the bookkeepers were doing manually to where we're like, well, if we automated that, like what does that do to their capacity? And we realized like
Mhm.
it added about 15% to each bookkeeper to where we're just like, all right,
Oh,
that now changes our capacity calculation. And so, I mean, we just went down to that very, I guess you say, simple capacity calculation, and just
sure.
kept looking at it and saying, what could we make better? What could we make faster? And as you
Mhm.
do that, your capacity number keeps growing and growing until we said, all right, that's at an acceptable level for us to be able to say, if we brought on 15, we could still handle it.
Yeah.
Yeah, so is that based on client revenue then? So like you're looking at, because like we base ours on book of business. So
Hmm.
if we're bringing an $80,000 a year client in, and we have 10 of those, you've got an $800,000 book of business. And so we say anybody working on that account has that same $800,000 of business. So we don't bifurcate
Hmm.
it on who's working on it, who's not, but they're assigned to that. And we know that based on history that, hey, a CFO can handle 800,000, no problem. And that covers their salary. And then we give them an incentive to add on more clients to where our top CFO, sorry, Tom, but you're not our top one,
I know.
is at $1.8 million revenue. And, with that, it's like, but she's comfortably at that 1.8 million and she can handle that. And occasionally she'll say, hey, I can pick up another one, or maybe I need to pull it back a little bit, but she's got that flexibility and then she gets compensated fairly for that. So we know that, hey, at the top end, we're probably at 1.8, but the bottom end, we need to have, let's say that's the $800,000. And that's not true the number, but it's somewhere in that ballpark. Tom would probably know the exact number. But there's a range there that there's that flexibility that, hey, maybe a junior person, 800,000 is going to be probably as much as they're going to be able to handle for a little while until they get their feet wet, they understand, and they work with clients more and that sort of thing. But we know a senior level person can maybe handle a little bit more because maybe they've been with their clients for such a long time that it's kind of a rinse and repeat thing. They know where all the bodies are buried. They're not investigating all these new things. It just makes it so much easier. And then they bring a new client on, and then hectic happens again. They're learning everything, and so we know that range. How do you look at it? Do you look at it in a similar fashion where it's based on a book of business, or do you bifurcate it based on time? Because we found with time, the problem with time is that it may take me, I might work on 2 clients for 80 or 40 hours a week and think I'm busier than hell. And then all of a sudden, there's no way I can add 2 more, because I'm just too busy. I don't work 80 hours, but then you get 2 more clients and you're still working that same 40, still busy. And then you get, another 4 clients. Now you're working 8 clients. You're still busy. You're working 40. You're figuring things out. Parkinson's law. You've heard me talk about it many times. And that's a true phenomenon. So how do you do it based on time? Do you base it on, hey, the minimum time you're going to take to get something, the maximum time? Do you base it on the junior person versus the senior person? How's all that weighted in your formula when you look at capacity?
Yeah, so for us, I would say we tend to weight a little bit more heavier on the time. And I think the caveat to that is where 70% of the work we're doing is on the bookkeeping side. So when we get to, if you look at the advisory side, I do think, to your point, like the time factor may not be the best barometer as you start looking at more of your advisory work. But for a lot, since 70% of our recurring work is on the bookkeeping side, it's like that's a little bit more process driven. It functions a little bit more like a manufacturing line. And so one of the things we started to look at it from a revenue standpoint at one point, and we started recognizing, like, we were looking at it from a revenue standpoint, and like we had 2 staff members that were at parity when it came down to revenue wise, but for one of them, like, we could massively automate, like, let's say 10% of their clients. The other one, we could massively automate 40% of their clients. So then we had a dynamic of like, they're at parity revenue wise, but one of them is working much harder than the other one. And the other one is just kind of sitting around because they were even communicating like, hey, I don't feel like I have enough work to do. And so we were just like, maybe revenue may not be the right mix, which is why like we had to go back down to like, okay, all right, if we look at how much time that it takes to do this, and what we really tried to do really, really hard, and it took us several months to figure it out, is like really standardize many of the processes. And I think that's one of the benefits of having a niche, is we can look at like, hey, there's usually a standard of how long it takes to do a 3-way trust reconciliation for a law firm. And since we know that, we kind of took a sample and said, all right, let's look at the most complicated clients, let's look at the least complicated clients, and let's come up with an acceptable average that all of us are going to agree to, or like the people involved with that would agree to. So that's sitting with the accounting manager and then sitting with the people who do that step and say, okay, all right, here's how long it takes on the extremes. We're going to set the standard and the target at X. And we're going to keep measuring that. Like, we measure that periodically to say, hey, like, how far off, or were we accurate on kind of that baseline of like, hey, here's how much time it should take to support this. And oftentimes what it does, it gives the accounting manager a good barometer to be able to say, all right, if this person is taking much more time than that, then there must be a process problem, or there's something unique here that we need to really look into and figure out. And so, because, like I said, 70% of the business is bookkeeping, it lends itself to be more process driven, to where we could establish like target, hours or minutes that this process should take. And then once we did kind of that math across the board, we can say, hey, to support a client, it takes this much time. So if we look in and say like, hey, if we give you 6 hours a day, here's how many clients you should be able to support with, working consistently 6 hours a day. And when we did that math, when we kind of went back with the team, and the team was like, this seems very reasonable. And then we tested it for like 2 months to see like, hey, it actually panned out well. Like our estimates were actually fairly accurate.
I like your process.
I guess the question that we have there is that, when we merged with Anders, we had probably about $8 million in virtual CFO revenue. We had a couple million in other stuff for around 10, and we had 55 employees. So fast forward 4 years later, we'll do probably between 16 and $17 million in revenue, and we still have 55 employees. Does that mean they're working more? No, and I'd say probably 50% of our what the tasks are the accounting stuff that you're talking about, the AR, the AP, payroll, that kind of stuff, and then the other 50% would be more on the consulting side. Tom, I'd like to kind of push it to you and kind of get your take on it. Are we working our people too much? What's causing that differential? What's your thoughts on that?
Yeah, I don't think that we're working with people too much. And as you had mentioned with the book of business, people have a choice. If Jody comes to me and says, do you want another client? I can say, no, I can't handle another client. And we can have that discussion. I think probably one of the biggest things is about the time we were merging with Anders, for a couple of years, we had really been pushing on delegating work. And what we found, and Terrell, I'd be interested if you're finding the same thing, at every single level, the CFOs felt like they were doing too much work that probably could be done by someone else. Too much in spreadsheets, too much accounting, too many journal entries. If you take a step to the senior accountants who are supporting them, they're saying the same kind of thing. I'm doing too many, like uploading bank transactions or recognizing them. I'm doing too many things. So there's a constant push of let's delegate. And we were running into the natural kind of resistance, like, well, I feel like the senior accountant's too busy. I don't want to give them more work. What we found is when you would go to them, they'd say, yes, I can do that. And they would recognize they probably did it better than us anyway. So, Jody, I think that was part of it. I think we did a good job of delegating. And then I think we did an awful lot from an automation standpoint, just putting together like the financial statement package. It was a beautiful Excel spreadsheet, but it took a lot of manual work to make sure it was right. And moving into a database, reach support on database, we spend such little time now going in and fixing that stuff because the foundation's there. Joe, I'm curious from a delegation standpoint, is that a big topic within your firm? Do you feel like that's an issue of people holding on to things that you'd rather than push down to less expensive roles?
Yeah, I would say we had that a good bit, especially I think at the accounting manager level. And where I noticed that to be the bigger challenge is where someone had performed well at a role. Like our accounting manager now used to be a senior accountant, did that role for a couple years, and then promoted that person to accounting manager. And what we realized is she was having a little bit of trouble letting go of what she used to do and what made her known very well within the organization. And it was just kind of like really having to work with the people who we've promoted because they did well at their last role. But once they got promoted, we noticed like that delegation became, more of a hurdle for them. And I think a lot of it was really just having to get back in and work with the team and teaching them how to let go of some stuff. And as you were saying, letting them know like, hey, it's okay. Like, did you actually have a conversation with that person that you were concerned about their capacity? Because I bet if you actually talk to them, they'll probably tell you they could do it. But I think similar to you guys, like we had people who were making an assumption that, hey, well, no, they're too busy, so I'll do it. And it's like, you should probably have that conversation with them to validate, is your assumption really true?
Yeah.
Yeah, I'd say another issue they had is that they would give it to that person would screw up. And they'd say, "Oh, I can do it faster. I can do it a lot. I don't have to worry about it. I can do it faster. It's going to be right 100% of the time."
I gave you one
And then
chance, right?
yeah, they're working like 60 hours a week, and they're like, "Gosh, I'm getting burnt out. What's the deal?" And it's like, well, let the person screw up. Let the person make a mistake. You'll catch it. You'll train them. You'll teach them up. And I think that happens a lot with offshoring too.
Yes.
We had that issue too. It's like, oh, those folks, they just don't know how to do accounting. It's like, seriously? They've got an atomic bomb and they don't know how to do accounting? Are you kidding? They're not. It's like, seriously.
Yeah.
And a lot of times that happens, maybe because they just assume that, hey, they get it wrong the first time, it's going to be wrong every time.
Yep.
It's like, well, did you teach them how to fix it? Did you tell them it was even wrong to begin with? Did you fix it for them? What's your delegation process? Is that would you do the same thing if that person was in an office right next to you? Would you just like correct it for them and then go on? Or would you go to their office, show them what they did wrong, fix it, and then, go forward? What's the process? Am I different from an offshore person than I am an onshore person? So I guess that's a big part of the problem, right? We had a CFO that was doing all their forecasting on spreadsheets and doing it all by himself. And guess what? He got sick, and someone tried to figure out what the heck he was doing, and it was a nightmare. It was like, how do you work this big thing? It worked for him, but it didn't work for it was outside of the process, and it just made things a lot tougher. And so when we looked at his schedule, he was working his butt off. He's working a lot of hours, a lot of time. We just couldn't figure it out until we dove in and figured out. We looked at the time, figured out, hey, there's got to be an issue here. We fixed it. Now he's learned the software. He understands it. It just took a little time away, maybe a little bit more time in that one instance there, but he's learned the process. Now he can delegate a lot more and feel comfortable that he's going to get the correct response back, the correct answer that's going to be correct every time, or 80% of the time. And he's got to go back and make changes. I mean, I guess I'm rambling a little bit there, Tom, but is that what you're seeing as well? I mean, do you think that's an accurate statement, or am I just
No, I think you're completely accurate. And I like that you mentioned the offshore, because Terrell, I'd love to hear how when you're delegating to offshore, you mentioned, I think before the show started, you have a lot of team in the Philippines. Mm-hmm. Can you tell us a little bit how successful you think that they are, and how do you think you work with them any differently, or what makes that work, given like what Jody was just describing that we've seen?
Yeah, I will definitely answer that. Can I ask Jody a question first before we leave this point? Like, I'm very.
He wants to know if it was me you were talking about. That terrible CFO. No, sorry. Go ahead.
I know that you guys have been through this, many more times than I have. Like, so, for you, when you're looking at a situation like that, like you have someone who's not delegating, like, how long does that window usually take for them before your message gets across to them that, like, hey, we need to change the way we're doing it? Like, how long does it usually take someone like to kind of get on board with that mentality once you notice that?
Yeah, I would say in some cases it never does. And those people eventually bow out of the firm, because what's happening is, they're working a lot of hours. They're not seeing their family. They're constantly being pushed up against margins that aren't realistic anymore. And guess what? They're going to blame. They're going to blame not themselves, but they're going to blame the firm. Hey, unrealistic expectations, whatever that might be. And we do have that every once in a while. We haven't had that in a long time, but we did get that for that was frequent for a few years there. Now it seems like once we are super transparent with everything. And what I mean by transparent is that every month, everybody knows everybody's book of business. They know exactly the book of business Tom's running, that Kristen's running, that James is running. Everybody knows, and so it's out there. And the benefit of it being out there is that I can't hide behind the unknown. I can't hide behind the, hey, I got $800,000. Nobody else is even remotely close to me, realizing you're probably the lowest book of business everyone has. And, oh, by the way, you've got the lowest amount of clients that anybody has. And I think that's a huge mental barrier, because I know, Tom, you were probably, I use you as the example of this all the time. You're, and correct me if I'm wrong, but you were probably 4 to 6 clients, and you're like, hey, Adam, Jody, I can't do 12.
Right.
Client. I can't do that.
I'm
that's
overwhelmed
not
with 4 to 6.
Yeah, I would love to push the conversation to Tom, kind of your experience, because you were the model. and you got through it. I'd be super curious on how you got through it. And in the runway that we gave you, I guess is what Terrell's question is. What kind of runway did we give you?
Yeah. What I was thinking, Terrell, when you answered that question, it's probably about 6 months where the conversation would be Jody and Adam saying, hey, at your level, we should be pushing these clients to you. Are you ready to take on one? And you're kind of giving that resistance, like, I'm feeling really busy in what I'm doing currently. So yes, and then I was looking around and seeing my peers who had been here a little bit longer, but they had much larger books and many more clients than I did. So I'm like, okay, they've got it figured out. I don't believe inherently that I'm just worse than they are. I did have to then look at myself and say, okay, I am not always following the standard processes. Like many new people, I'll come in and if Jody says build a forecast, I know how to build a forecast, so let me do it on the side, like the Excel. He wasn't talking about me, but it sure reflected kind of how I worked at it. And then I'll turn around and I'll put the forecast into our tool, and that's a lot more work to do that. And that happened over and over. So then I started saying, okay, then how do I do it in a standard way? And it was worse to start with because I was bad at it. And then you're like, oh, this actually is working. There's a learning curve. And then that started to kind of continue to do. I do think that Parkinson's law is true, though, right? You'll fill the time that you have. And so when I had 6, I just spent a lot more time in sheets. And when you have less time, you do think about, okay, how could I do this quickly? I've got about 20 minutes. What's the real answer I'm trying to get? And how do I do this as simply as possible? And oftentimes we over engineer when we've got extra time. And that was the second thing.
I would say another thing, Tom, was that with the way that we run our meetings, we'd go into a forecasting call, and maybe the client would need some changes, and so instead of actually doing those changes right in front of the client, we'd write them all down, and then we would do the changes. We'd come back for another forecasting call, find out that we got half the assumptions right. We'd then go back for the third one, and in reality, it took us 3 iterations of that, which means 3 at least hours after the fact, getting things done. Whereas we could have done that right in the call, got it done, we're done, off to the next thing. Would you say that was also an issue?
Yes. As you're saying that, I totally forgot to mention that. We encourage people to show on the forecast screen. I'm bringing it up so we can see it together. And I'll admit, initially, I wasn't good enough at the forecast that I didn't want to show you, Terrell, because you would realize I didn't know what I was doing, right? And that was just a very natural, like, hey, can you change this? And I'm like, there are parts that are held together by, baling wire. I don't want you to see it fall apart. But it was so good when I could do it that when we're done, I'm like, I'm not even thinking about Terrell until the day that I meet with him next, and I'll brush it up, versus like Jody said, I've got 6 things on to-do list that I need to send back to you. And then you say, that's not right. Can we meet again? So yeah, Jody, you're right. The more that we can do in meetings. Adam says the same thing during a cash flow call. When a client says, can you pay these bills? Pay them during the meeting. You've got the screen up saying, I'm in bill.com. You're seeing me click these 5 things. Are we all aligned? Done. When I leave the meeting, I am completely finished. And you've seen it happen. So there's a lot less chance of you calling in saying, I didn't want you to pay Jody. We had agreed that, such and such. Mm-hmm. You're like, no, you watched me click it. We all agreed right before I did it. So doing those things in the meeting, and the clients like it better, right? The client's actually watching and seeing that it really works, not some black box.
So it becomes more of a working meeting than a reporting meeting. Reporting meetings they really do kind of suck. You're there, you're watching, you're getting reported. You're probably eating popcorn, doing other things on the side. Whereas with a working meeting, you're truly engaged, and it's like because you understand and you're going through scenarios and whatever that might be. And I think that really kind of helps that Parkinson's law become more reality. Because again, you can spread it out. You could do it after the fact, and you could do it after the fact multiple times because you screwed up multiple times, and then you got more people involved. Whereas if it was just done at once, during that meeting, you can't do everything during the meeting, but 90% of it you really can. And I think that was a big part of it. Do you see the same thing, Terrell, or is yours kind of after the fact? Or are you super curious on how you do the consulting side?
Yeah, so I would say we were probably very guilty of the prior scenario that you described of we'll take all the notes and then we'll go back. Okay, yeah, we'll get back to you on that. And I think, even as you were talking, I'm just like making mental notes because maybe I'd probably say 6 months ago, I had a thought of just like, man, there's got to be a better way to do this. And I do think of making them more working meetings than actual reporting meetings, because I think back to a couple of the CFO clients where it has been a working meeting, what I was thinking to what Tom was saying, like, I'm like, yeah, that is right. Like, I meet with them in a meeting. We change the numbers on the screen. Like, we walk through it.
Mm-hmm.
Like, they want to hire somebody. Let's just walk through the
Yep.
compensation
Yep.
Yep.
calculation. After the
Yep.
meeting is over, like, I move on to the next thing, and then we talk again when we meet again. I'm like, that's way more productive than the ones where we show up, we present the numbers, we talk about it, take some notes, and then, all right, I'll follow up with you later. And it's just like, you know what? It's much better to just like transition all of the meetings to working meetings as much
Mm-hmm.
as you can. And I think
Yeah.
even from a pricing standpoint, like, to me, it
Yep.
seems like it drives more value for the client, because
Oh,
the
100%.
client can actually see the value being demonstrated in front of them, as opposed to,
Mm-hmm.
like, they have no idea what we're doing when we're not on a
Yeah.
call with them. They have no idea what we're doing, throughout the week. But in that meeting, if they can see, like, hey, here's how the gears are turning, here's how the value is being
Mm-hmm.
produced. I mean, I that is something that, now that you guys say that, it really sparks and really kind of pushes me towards that of like, hey, we need to go back to making more working meetings, less reporting meetings.
Good.
Yeah, because when you think about it, I mean, when you leave those meetings, anyways, you've got these 5 tasks, and so then you go to the next client, and you go to the next client. You're like, I gotta get those 5 tasks done. You go to the next client, they give you 5 more tasks. Now you got like 15 tasks. You're trying to do, and you're always pushing it off, and then you're getting like within a couple hours of the next meeting that you've got to meet with that client. You're like, well, shoot, I got to do those real quick, and then you don't have half the answers.
Yeah.
And then you forgot the questions or whatever that is. Whereas just through that working meeting, I think clients appreciate it because it makes them feel more like, hey, you're in the office with them. You're sitting together, you're powwowing, you're coming up with a solution, and we know that all the assumptions are correct because we did it together.
Yeah.
Versus then the clients challenge you. Did you do this? Did you account for this? Did you do all these different things? Oh, I forgot that. Well, let me go ahead and change that on our next meeting, and I'll show you what that result looks like. Then that's horrible. That's a bad
Yeah.
experience. But I think when you're right, Tom, when you have everything together and you're doing it with the client experience is much better, and they get the result they want. And then it's not it's out of sight, out of mind. Then, and you can really kind of
Right.
free that mind for that next client.
Yeah. And one of the things that Jody does really well, and I've been trying to learn from this, is
Yeah, wait.
Jody is really good at asking the clients questions. As accountants, I think we feel like, and I feel like I need to come in with all the answers. Terrell, I'm going to tell you how your business is running, and there won't be anything that you can stump me with. And Jody will come in and say, hey, why are you spending so much more like in this area? Like, what's going on here? And get the client to talk. And of course, if he's making a point, I mean, he is making a point, they're going to understand it better when they explain those kind of things. And so more that working meeting where we get out of it's 45 minutes and I should be talking the whole time. And this is a big presentation I'm giving you versus the conversation for doing that. So another thing to think
Yeah.
of.
To kind of add to that, we always have 2 people in the meetings, right? For a lot of the meetings. So,
Mhm.
like for instance, a financial statement meeting, if we're going through that, I'll always have the senior level accountant presenting it. I won't present the financial statements. I'll have them presenting it, and then I'm going to sit on the side of the client, and I'm going to
Mhm.
sit with the client, ask the questions to my senior accountant for what the client should be asking questions about.
Yep.
Hey, I noticed direct labor is really high, and then the accountant will explain to me why, my team will explain to me why it's high. And then the client will pop in and interject there. And so I kind of sit on the side of the client as I'm doing it and with the accountant. Now, the key to that, though, is that I meet with the accountant beforehand and tell the accountant what I'm going to be asking. Hey, I'm going to be asking about this. Can you dig into this a little bit? And then eventually what happens is, I've done it so many times with that accountant that they understand and know how to read a financial statement now. They know what's important for this manufacturing company. They know WIP. That they've got WIP dialed in. Because they understand exactly the questions I'm going to ask them. They have all the different things that they should know coming into it, which they don't. We're teaching them how to learn. And hey, I'm teaching them really how to read a financial. So I'm teaching them really how to be me. And so what happens is eventually I'm not going to be in that meeting anymore because I'm moving on to maybe a different client, maybe a bigger client or whatever. And guess who's going to move into that role because the client is already super familiar with this person. They've already developed that trust. and that senior level accountant knows everything about the client. So it makes it a really smooth transition for them, and the trust levels there, the comfort levels there. And guess what? They're bringing the next accountant in. They're doing the exact same
Mhm.
thing because they've seen me do it. So automatically they're going to do and follow the same, same process, same ideas, and I think that really works out well.
Yeah.
For a lot of cases with that.
Yeah, I mean, I think it speaks to, I mean, why the firm has gotten to where it is, because I think that is very brilliant wisdom. Because I think to the question that Tom was asking is kind of when it came down to the offshore team, it's, we struggled with that for a while of like really getting the offshore team up to speed,
Oh,
especially
uh-huh.
since, with
Mhm.
the gap in time and then also the gap in culture. And I think it was maybe 2.5 years ago. I remember having breakfast with Jody, and one of the things that Jody had mentioned about was like, these offshore team, like they're human beings just like us. If we learned it, they can learn it too. It has to be something in the way that we're actually training or we're working with them. And after Jody said that like 2.5 years ago, I it changed how I worked with my offshore team of just like,
Hmm.
what if we made kind of some of our internal meetings a little more working meetings to where we could actually demonstrate like, okay, what was the assignment I was giving them? Let's just work on it together. And when we started doing that, that's where I really started to see like our internal team, like their skill level started to make huge exponential, growth in their skill level, because they weren't trying to figure out what I was saying, go do it on their own, and then come back just to find out that they weren't completely right. But the more we started doing those internal meetings, and like we started doing things like I called it a financial statement review meeting, where I would say it's like, even for the staff that didn't participate in client meetings, I'm like, hey, in this meeting, you're going to show up, present, you walk me through your client, treat me as if I were the client. And then
Mhm.
I would ask them the questions, and I'm like, hey, here are the types of questions that would be on the client's mind. And what I noticed is that allowed me to train them how to think at the next level. And
Mhm.
that's been a huge, like, kind of, I guess, way for us to really capitalize on the value of having an offshore team while also creating an internal way to be able to train them and develop them.
Yeah, that is
I
great.
love
And
it.
Terrell, that's one of the things we are pushing internally is that before a client meeting, you're having that internal financial statement review, and we're going through and understanding the variances. And so the same kind of questions that Jody's asking the client meeting, we're asking, and you learn a lot. I've gotten things of, this expense is higher this month because we paid the full year's bill for something. And so then you're like, why wasn't that a prepaid item that we had? Or those kind of variances where you're teaching someone, hey, when you look at this, you should be really thinking about, is that the correct accounting, in addition to kind of the story that you're telling in doing that. And yes, in that case, you are teaching them, because after a few times of that, someone should then be comfortable explaining it to the client, because I've gone through and asked everything I can think of to make sure that it's accurate and that I can explain this story. And then, of course, I'm better prepared in front of the client because I just went through and I was developing my story during that meeting. So would you say, like, before client meetings, is that a pretty consistent process you guys do, that there's an internal review that everyone's going through and kind of talking about it before reviewing it with the client?
Yeah, I would say probably in the last 8 months, we've gotten more. I would say more timely about those internal reviews, because for some
Hmm.
of them, what we would have is, let's say, for example, like the bookkeeper wouldn't be in the client meeting, and so we were having some of those after the fact. And
Uh-huh.
so I think the goal had been is like, how do we move as many of those reviews prior to the meeting, because that's when they're probably the most useful, is to have
Yes.
them before the meeting as opposed to like a kind of a post-mortem meeting. So I would say in the last 8 months, we've gotten better at moving more of those meetings prior to the actual client meeting, so that everybody can kind of get a chance to go through that drill for the people who are in the call and the people who aren't on the call.
Yeah. For us, it's the leader of that account team that has to push it. So the CFO or the controller. when I'm not doing it's because I'm not, because I feel too busy, and say Jody's my senior accountant and Jody always does this really good work. And so I'll just look at it quickly, and you can probably almost guarantee that like in 6 months, I'm going to look and go, wait a minute, this balance hasn't changed for this long. Jody, what's going on? And you're like, if we were there month after month, we would catch that. And so when we invest that time, it's worth it. When you don't, that's when you get yourself caught, and then you're cleaning up something that you should have caught before.
Absolutely.
Oh, okay. If you're willing to transition to, we've got some kind of rapid fire questions, and I'm going to ask both Jody and Terrell to answer these. So kind of short answers. I got 3 questions for you. And we're kind of, hey, what are some last little wisdom bombs you can drop? Okay. What do you think is one skill that CPAs should have now that maybe 5 years ago wasn't that important? So maybe for this one, Jody, I'll start with you for this one. What's one skill for CPAs that you think 5 years ago maybe not as important?
The ability to communicate with clients, to convince or to read clients, to listen to clients, and to be able to then persuade them in a way that guides it to the best interest for them. So a lot of times communication skills were not a big deal because we hid behind them as accountants. Now I think they're becoming more and more, especially with AI. I think communication is huge.
Excellent. Terrell, how about you?
Good luck, Terrell. Good luck.
Well, I'm not going to repeat the same answer.
Yeah.
Because I went to Indiana and you went to Notre Dame.
I would say I think the ability to think like a entrepreneur, because I think accountants they're on the ground level. They see all the numbers coming through. And I think sometimes when accountants are just so focused on doing the technical work and they're not like, okay, what does this mean for the business? Like the accountants are probably the first ones who can see the story playing out. And I think accountants have to learn how to think like the decision maker looking at the numbers as opposed to just, hey, my job is just to do the numbers and make sure the financial statements are right. But at the end of the day, these financial statements mean something. And we got to be able to think that way so that we could tell a better story.
Okay. I'd give you
very good.
You got the one. You won
that one. Okay, so Charles, I'll start with you to answer this one. Okay, so where do you think firm leaders should spend more time now than what they currently are? And both you guys are leaders of firms. So where they spend their time, where should a leader be spending more time than they probably are?
I feel like this one is like really jaded towards like Jody winning because like Jody has way more experience than I do at this. So
I don't know how this turned into a competition.
I can have a lot of experience doing it wrong.
Yeah. Well, I'll throw you a softball. You are known for content marketing and developing stuff. I was guessing that's where you were going because that is huge. But
I was gonna say spending more time with the staff because as you said, like I do a ton of content marketing stuff where I'm realizing it's like where I may have spent more time on that than I probably should have because while I was doing that very heavily, which is great for, the business continue growing, I think there's some disconnect that happened with some of the people on the team of them not fully grasping the vision of what we were building. And so I had to stop doing as much content marketing and start, doing these kind of 15, 20-minute check-in kind of vision setting meetings with the staff of just making sure like, hey, is everybody on the same page with the vision that we're building? Because like in the marketing, I'm selling one story, but you guys are building towards something else. So I would say, I think leaders need to spend a little bit more time doing those kind of vision casting or vision alignment meetings with the team.
Very good.
Yeah, I 100% agree with you. But I would add to that a business owner really needs to get out of their own way. And what I mean by that is they need to be able to empower the team to make decisions, to screw up, to do things. Guiding them in the right direction is important because we get paid as owners to make decisions. We don't get paid as owners to put in hours. And so there's a huge flip from what a busy bee would do versus what an owner would do. And I think a lot of times we get confused, with that, so at certain levels, we've got to get the hats off of our plate, meaning that the production hat needs to go the very first one that needs to get off the plate, right away to where I'm out of the weeds, out of the client servicing, into the actual business. And then the other ones would be like marketing and sales. We need to then hire somebody to bring in to do that. Although we do it great, just like you, Terrell. If I wasn't in accounting, I'd probably be in marketing because I just love doing that so much. And with that, but I realized there's no way I can run a firm and be the marketing person too, and do them both effectively. So I had to figure out a hat to get away from that. Then finance was the next hat, and all the different hats there, and then finding folks that can actually do the job better than what you can do. And I had no problem with that. I don't think I ever got that wrong. I found people that were much better than me in all those different areas, and that's comforting because then you can then delegate and not abdicate, but delegate and keep that going. To your point with the vision, now I'm spreading the vision amongst my leadership team. So my leadership team is hearing the vision and compounding it. So then they take that vision and then they move it down to the folks below them and below them and below them type of thing. So I think that's important as we can, is getting all that everything off of our plate so that we can do what we do well, and that's making decisions.
Yeah. I'm struck for both of those answers how it's a continual process as the firm gets bigger. That Terrell, as the team gets bigger, you're probably getting a lot fancier in how you explain visions and things because it's more people. And Jody, for you, shifting roles, there's a time where you did everything, but then continually, okay, I got these off my plate, but as it grows, more and more things are coming off to do that. And so it's not just sort of a one-time thing.
Mm-hmm.
Okay. So then for you guys personally, and Jody, I'll ask you first for this. If you could go back 10 years, what would you do differently in your career?
And people ask this all the time. I wouldn't do anything differently, and I wouldn't do anything differently, really anything in life. And the reason being is because I'm who I am today because of all the mistakes I made. And if I hadn't made those mistakes, would I have done things that I'm doing today? No. And I look back from the very beginning. If I would have had a lot of money when I started Summit, I probably wouldn't have subscription-based billing. I probably wouldn't have went remote for different reasons. But why go remote? Everything is good. I own this really gorgeous building, and all these different things. Why would I do anything differently there? And so every mistake that I've made, I truly feel it is a blessing if I look at it that way, and from there and grow and figure out how to do it. Because building a business is really hard, and when all these different obstacles are thrown in your way, you got to figure out how to get around the obstacle. And some are bigger than the others. Some of the things are boulders, and some are little pebbles, and so you have to be able to handle both of them and kind of work through it. And so I would say I wouldn't do anything differently. There are some decisions that's like, bummer, I did that. But in the same part, here I'm today because of that. And so, you kind of have to live. The other thing is you have to live with the decisions that you do make. That's important too. You can't deflect them or run excuses. Hey, I did this, which was probably the wrong thing. I learned from it, but I did do it. It was my decision. And that's where I mentioned that the owner has to make the decisions. They're not going to always be the right decisions. That's the thing. But we've got to learn as owners, as CEOs. Hey, we need to take that information and use that going forward, put that in the data bank so we don't ever do it again, or we do it differently the next time we see that opportunity or that.
Excellent. Terrell, how about when you reflect?
Yeah, thinking back 10 years from now. So 10 years from now, 10 years ago, I was 5. So
5. Nice. Been married, 5 and married.
Yeah, I would pick a different high school, right?
But no, just joking. In all honesty, I think, very similar to Jody. I think if I think back 10 years, I don't think that I would tell myself to do anything different, because I think the decisions that were made, really culminated into where I am now, of the way that I understand things now. Because 10 years ago, I was, working for, Fortune 500 company, trying to help, engineers understand finance as we were trying to make decisions in the aerospace industry. And so what I probably would say, if I had a time machine to go back 10 years, is I'd probably tell myself just, appreciate where you are right now more, because every one of those experiences that I remember, I'm leveraging it now, because it was probably when I was working for a Fortune 500 company was when I really started to create content, because that's when I started writing a blog, because engineers kept asking me the same questions like, well, I don't understand gross margin, or why can't I buy all the inventory that we need? And I'm like, well, we got to manage cash flow. And so I just got tired of re-explaining it. So I started writing a blog on why we needed to manage cash flow and like how cash flow worked. And when they would ask that question, I would send them a link, here, read this blog. And I was like, I didn't realize like that creating content would then turn into like, eventually me running my own business and really building on like that content journey. And so I would probably just tell myself like, hey, appreciate where you are right now, because everything you're doing, you're going to leverage it in the future.
Yeah. Oh, that's a great answer. And both of those are great. And also I like the appreciate comment, because it probably, if you could, the big problems that you hated dealing with, you might have a little different attitude, like, okay, this will be, once I get this figured out, I'm learning some skills and I'm getting some things in place, versus it's very frustrating often when something happens and you didn't think you had time to deal with this big mistake that was made or whatever. So love both those. Well, thank you. I hope people got some good wisdom from that. This has been a great conversation. I've learned so much, as I often do. But Terrell, I remember years ago when we met, learning a ton from you. I have again today. This was really exciting, and thanks for spending the time with us today.
Hey, thank you. And I've learned a lot too. So thank you guys for the lessons. I think whenever I get the chance to talk with Jody, it is always a lot that I'm going to learn.
Good.
Whatever.
Jody, thanks for joining. I know when you saw Terrell on the list, you pushed Adam aside and said, okay, I'm going to be part of this one. So that was.
No, I drew the wrong straw. It was like I took a vacation day and I had to come in and talk to Terrell. It was like, it was real. I definitely volunteered once. Once Roxanne came and said, hey, Adam can't make it. Can you do it? I'm like, who is it? And it's like Terrell. It's like, oh, absolutely. I would definitely do that. I always love talking to you and your wife, and we always have a great time with each other when we're at the conferences together. And that it's nice to have somebody that I can open up to, like yourself.
Awesome.
Excellent. Well, we hope everyone enjoyed the episode, and we'll talk to you again soon.